In this video we are going to be analysing SPY, which is obviously the S&P 500 ETF. So to get straight into it, first I do want to note, obviously do be looking out for this week because fundamentals are always going to be the key driver over technicals, and we can see going over to the economic calendar next week, there is quite a lot of big news coming out of the US. We have the flash services PMI, the consumer confidence, advanced GDP, and really the key one, which is going to be the core PCE for the week. So really these are going to move the markets, so always take these into account first because technicals will help you get better entries and exits, but really the key driver is always going to come down to these technical moves, fundamental moves. But anyway, to get into the technical side of things, what are we focused on? So we can see when the market was putting back its 52-week low did bounce off our first deviation on the 6-month chart. This is usually what you expect, especially on these indexes. You tend to just see buying pressure come in because it will be long-term investors or even algos buying it up at these levels, and then we push back to that statistical mean as expected. And now really we could just continue to fade down, but again it's probably going to be more down to the news which comes out this week. But if we do continue down, then we will have a level at 345, but considering we've already hit this first deviation, we may get a small bounce, but we will most likely continue further through it, and that key level will then go to 337, and here this is when we could start expecting to see quite a large bounce once again. But in time, again, going even into the week further, because there is even bigger news coming into the last week of the month, especially on the economic calendar. But if we do sell off even further, then we're paying attention to the 318, 303, 290, 270, and final levels at 263 and 235. Now, on the support side, obviously, we don't really expect SPY to push all that way down. But really the key focus, all you ever have to focus on is where we are now. So if you're paying attention to the supports, really the only levels you need to be paying attention to is 345 and 337, because coming into these levels we would at least expect a slowdown once we hit this level, at least a bounce usually. But if we're going to continue further, you want to see a break of this 337, come back to retest it as a resistance, and if you see it can't break back above it, then that's a good indication we will continue down to at least 317. Now on the other side, if we start continuing to the upside or start pushing to the upside, obviously on SPY that 384 is always going to be a key level because that is a 20% sell-off from the highs, which is considered to most people considered the bear when we turn from bear market to bull market. So when we're below this level, and you can kind of see before we kind of broke here and broke back above it quite quickly as you saw buyers come in, because usually buying below that bear market line you're getting a relatively good price if you're a longer term investor. And then in time again we saw that continuation back down. So if we push back up, do expect there to be profit takers coming into this 384 because this is going to be known by both algos, traders and investors, so a lot of people are going to be looking at that level. But if we do break through there, then we are paying attention to $400, 405, and they're going to be those key levels. But really what is going to be key is if we can break above this 384, we will pull back to retest it as a support. And if we can hold it, this could be a good indication that at least for the time being, the equity markets may just subside where they are or start to be a bit more bullish, especially considering we're seeing a lot of things from the Fed more recently. They're expecting to do 75 basis points on the next hike. And then maybe, I think it was another 50 or so coming into the next one. But that means, and we have seen from more of the more hawkish members of the Fed, that they may start to look to, or likely not going to hike rates as much or as strong coming into 2023, which is obviously a good sign for the equity markets, because if rates are cheaper, or at least they're not getting more expensive, businesses can take loans, and that's how businesses grow. And obviously that's going to be the key driver, because if businesses grow, the stocks are going to go up. But yeah, if we do break that 400 and 405, then we are paying attention to 425, 440, and then breaking up to final levels at 453, 475, and 508. Now, obviously, we don't need to pay attention to all these upside targets, but also at the same time, really, again, it's the same thing. You only need to focus on really where we are now. So the 345, the 384 are the only two levels you actually have to pay attention to, because they're the only two levels we are closest to. So if we come down to the 345, can we hold it? If not, expect a continuation down. 384 going to definitely see selling pressure come into this level, but if we are able to break over it, come back to test as a support and we can hold, so good indication until at least fundamental news comes out, we will continue up. So that is the main breakdown on the S&P 500 ETF SPY. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.